Are you considering buying a home or refinancing your current mortgage? If so, you'll want to know about the different types of mortgages available to you. In this video, we'll be discussing the most common types of mortgages, including fixed rate, adjustable rate, interest only, balloon, and more. By the end of this video, you'll have a better understanding of each type of mortgage and be better equipped to choose the one that's right for you. So, let's dive in. Fixed rate mortgages. A fixed rate mortgage has a set interest rate that stays the same for the entire term of the loan. This makes it a predictable and stable option for borrowers who want to know exactly what their monthly payments will be over the life of the loan. Adjustable rate mortgages (ARMs). An ARM has an interest rate that can change over time based on market conditions. Typically, the interest rate is fixed for a certain period, such as 5 or 7 years, before adjusting up or down based on the current market rate. This can make ARMs a good option for borrowers who plan to move or refinance before the rate adjusts. Interest-only mortgages. With an interest-only mortgage, the borrower only pays interest on the loan for a certain period of time, typically 5 to 10 years. After that, the borrower will need to start paying down the principal, which can result in higher monthly payments. Balloon mortgages. A balloon mortgage is a short-term loan with a large final payment due at the end of the term. These can be risky for borrowers who may not have the funds to make the final payment when it comes due. FHA and VA loans. FHA loans are insured by the Federal Housing Administration and require a lower down payment, making them a popular option for first-time homebuyers. VA loans are available to active duty military members and veterans and offer favorable terms such as no down payment or mortgage insurance. Jumbo mortgages. A jumbo mortgage is a loan that exceeds the maximum loan amount allowed by Fannie Mae and Freddie Mac. These can be a good option for borrowers who need to borrow more than the conventional loan limit. Reverse mortgages. A reverse mortgage allows homeowners over the age of 62 to convert some of the equity in their home into cash. The loan is repaid when the borrower sells the home or passes away. Understanding the different types of mortgages available is key to finding the right loan for your needs. So, whether you're a first-time homebuyer or a seasoned homeowner, be sure to do your research and weigh the pros and cons of each option before making a decision. And if you want to learn more about mortgages, be sure to check out our other videos on this topic. When choosing a mortgage, it's important to consider your financial situation, your long-term goals, and the current market conditions. For example, if you plan to stay in your home for a long time and want a predictable monthly payment, a fixed-rate mortgage may be the best option. However, if you plan to move in a few years or think interest rates may decrease, an adjustable rate mortgage may be a better fit. Another important factor to consider is the down payment. Most mortgage lenders require a down payment of at least 3–5% of the home's purchase price, although some loans, such as VA and USDA loans, may allow for no down payment. A larger down payment can result in a lower interest rate and lower monthly payments, so it's important to save up as much as you can before applying for a mortgage. It's also important to shop around and compare rates and fees from different lenders to ensure you're getting the best deal. Be sure to read the fine print and understand all the terms and conditions of the loan before signing on the dotted line. In summary, there are many types of mortgages available to borrowers, each with its own pros and cons. Understanding the differences between fixed rate, adjustable rate, interest only, balloon, FHA, VA, jumbo, and reverse mortgages can help you make an informed decision and find the best loan for your needs. So, check out our other videos on this topic to learn more, and happy house hunting! Let's delve deeper into some of the most common types of mortgages. Fixed rate mortgage. This is the most popular type of mortgage, where the interest rate remains the same for the entire term of the loan. The main advantage of a fixed-rate mortgage is the stability it provides, as your monthly payment remains the same throughout the life of the loan, making budgeting easier. Adjustable rate mortgage (ARM). With an ARM, the interest rate can fluctuate based on market conditions. The initial interest rate is often lower than a fixed-rate mortgage, but it can increase over time. ARMs are a good choice if you plan to sell or refinance the property before the interest rate adjusts, or if you believe interest rates will go down. Interest-only mortgage. With an interest-only mortgage, you pay only the interest for a set period of time, typically 5 to 10 years. After that, you start paying both principal and interest. This type of mortgage can be risky because your monthly payment will increase significantly after the interest-only period ends. Balloon mortgage. This type of mortgage offers lower monthly payments for a set period of time, typically 5 to 7 years, followed by a lump sum payment of the remaining balance. Balloon mortgages can be risky, as you may not have enough money to make the final payment or may not be able to refinance the balance. FHA loan. Backed by the Federal Housing Administration, FHA loans are designed for low to moderate income borrowers and require a minimum down payment of 3.5%. FHA loans also have lower credit score requirements and more lenient debt-to-income ratio standards. VA loan. VA loans are available to eligible veterans, active duty military personnel, and their families. They offer 100% financing, which means no down payment is required. VA loans also have lower interest rates and don't require mortgage insurance. Jumbo loan. A jumbo loan is a type of mortgage that exceeds the conforming loan limit set by Fannie Mae and Freddie Mac, which is currently $548,250 in most areas of the U.S. Jumbo loans typically have higher interest rates and stricter underwriting standards. Reverse mortgage. A reverse mortgage is a type of loan that allows homeowners aged 62 and older to convert some of their home equity into cash. The loan doesn't have to be repaid until the borrower dies or sells the home, but interest continues to accrue. Understanding the different types of mortgages available can help you make an informed decision and choose the right loan for your needs. It's important to note that there are many other types of mortgages available beyond these 8. For example, some lenders offer hybrid loans that combine the features of fixed-rate and adjustable-rate mortgages. Other lenders may offer specialized loans for certain professions, such as doctors or teachers. When choosing a mortgage, it's important to consider factors such as the interest rate, the length of the loan term, and the monthly payment. You should also consider the total cost of the loan, including any closing costs, fees, and other charges. It's also a good idea to shop around and compare rates from multiple lenders to ensure you're getting the best deal. Don't be afraid to negotiate with lenders to get a better rate or better terms. Overall, choosing the right mortgage is a big decision that requires careful consideration and research. Understanding the different types of mortgages available is an important first step in the process. If you're interested in learning more about mortgages, be sure to check out my other videos on this topic. So, there you have it, the most common types of mortgages explained. Remember, choosing the right mortgage is a big decision that requires careful consideration and research. Be sure to weigh the pros and cons of each type of mortgage before making a decision. And, as always, be sure to shop around and compare rates from multiple lenders to ensure you're getting the best deal. Thanks for watching, and be sure to check out my other videos on mortgages for more helpful tips and information.